Survival. Ethereum's resilience through time. Unless you are breaking stuff, you aren't moving fast enough. Mark Zuckerberg. So, wanton development, a clash of ambition and prudence. A philosophical tenet spelled out in the white paper, agility means Ethereum is open to changes and adjustments so long as they help manifest the protocol's greater ambitions. Constant changes can cause unintended consequences or create vulnerabilities. Most exploits are not due to errors in Ethereum's underlying code, but rather to improperly composed or poorly coded smart contracts. Getting some tongue twisters today, man. So, moving too quickly and breaking things. Ethereum's technical complexities require updates be deployed in stages over time rather than in one major change. This iterative approach in unison with its composability means more opportunities for flawed code to be exploited by bad actors. The DAO hack that led to the Ethereum Classic hard fork is the most significant breach to directly affect Ethereum's protocol level. The majority of exploits only affect specific smart contract vulnerabilities. So this here, as we spoke about briefly in the history section, the DAO hack is the most substantial flaw, the most substantial break to happen inside of the Ethereum ecosystem. And basically, long story short, the DAO was actually what the first DAO was called, launched, and it assumed a ton of money, a ton of people deployed and sent their Ethereum to this DAO. They raised over $150 million worth of Ether, and it was one of the earliest crowd funds. And at the time of it being hacked, it actually lost $60 million worth of Ethereum at the time. And so once this happened, it forced the leadership of Ethereum to make an assessment of, okay, do we approach this from a blockchain, almost Bitcoin, purist mindset of, well, it happened on the blockchain, it's supposed to be an immutable record, we're not going to mutate the record. But ultimately, Vitalik wound up proposing a soft fork for the network and added a piece of code that effectively blacklisted the attacker to prevent them from moving those stolen funds. And as a result, what they had to do was split off the chain in a hard fork so that they could roll back the chain to the prior state before the hack happened. And then the people who were opposed to that, they went ahead, and that new version of Ethereum is why it's called Classic, because technically that's the original chain. But based on how the fork went down, most of the consensus went over to the Ethereum chain instead of Ethereum Classic. So that's what people, when they speak about Ethereum, that's what they're referring to, even though technically Ethereum Classic is the original non-augmented chain. So then scaling issues and network congestion. The growing use of dApps, while a positive metric of adoption, puts a technical strain on the Ethereum network's low throughput. A sign of things to come, CryptoKitties foreshadowed the effects of congestion exposed during 2020's DeFi summer. Failed transactions created a punishing environment for novices looking to explore trustless capital markets. Meanwhile, surging gas fees made DeFi trading and yield farming unprofitable for the majority of users. Now, funny enough, a very similar thing occurred in 2021, not just with DeFi, but also because of the NFT usage. And then after NFTs kind of had their fizzle out, or their sizzling down after Q1, it was actually found that meme coins were one of the main reasons that the fee usage, the gas fees were so high, because so many people were using DEXs and swaps to get themselves Shiba Inu or, Doge Elon, or just all these different meme coins that were having tremendous gains in a short window of time. But the main downside to all of this is that these gas fees being so high, it pushes a lot of smaller users, basically non-whales or people trading with smaller accounts, out of the market, because if you're making a swap on Uniswap, but it costs you $30 to do so, it makes it unfeasible to be trading with $100, $500, because so much is being eaten up in gas fees. And this is really the result of so much traffic being used on the network because the usage is high. But this is also part of why we saw Polygon explode, because it's a side chain, right? And then we're seeing other things like Starkware, which is what the decentralized leverage trading and margin trading platform DYDX uses, and other optimistic rollups. These are all alternatives to help Ethereum scale prior to the full deployment of shards on the ETH 2.0 chain. Now, the third aspect is this this phenomenon known as miner extractable value. And basically what that is front running by bots. So the Flash Boys research study from Cornell conveys the complex risk created by transaction ordering dependencies within smart contracts. Quite similar to Wall Street high-frequency trading techniques, miners deploy arbitrage bots to bid up the average gas price via priority gas auctions, influencing the prioritization of transactions being added to the block in order to drain profits from the network. MistX is a DEX specifically created to minimize MEV. Now, MEV is something that was theorized early on in the existence of Ethereum, but it really seemed to kind of come to a head in 2020 and 2021. And basically, at this point, there are tools being created and deployed to help minimize this issue. And as mentioned here, MistX is actually a platform where it effectively is Uniswap, but it's Uniswap in a way to beat out the MEV problem, the front running from these bots, basically these invisible fees. And then in addition to that, there's also this platform that is made by the same people where you can actually look at, let's see, sandwiched. It allows you to actually scan your wallets to see how affected you may have been by the MEV problem. And so you just connect your wallet or you enter an address, and then it'll actually can show you how many times or the extent to which you've been a victim of the MEV problem. And so call it sandwich because you're getting squeezed in between these high frequency trading bots who are then, extracting the value from the network. So up to this point, these have been, from my viewpoint, the most jarring issues affecting and plaguing the Ethereum blockchain as a whole. And as such, these are the things in these areas where Ethereum definitely has to do work to improve and grow. But a lot of these issues are being worked on, and solutions are being found and remedies. But hey, this is what happens when there's a clash of ambition and prudence. Moving fast and breaking things.